Hello everyone, a warm welcome to all of you for the webinar on Architecture Battle 2. Before we get started, let me give you a brief about the tournament, that is Architecture Battle 2, and about our speaker today. So after the massive success of our debut tournament, Skilenza's community of architects, which is Arc League, is all set with an exciting venture for system design engineers, senior engineers, as well as architects. We present to you Architecture Battle 2. This tournament is sponsored by Microsoft Azure. This time, the theme of the Architecture Battle 2 is FinTech solutions and the digital landscape. So we have our expert, Mr. Utsav Pathak, who would be sharing his insights on the topic and would be providing additional inputs on wealth management as well. So Utsav is an avid fintech enthusiast certified in artificial intelligence in finance from the Center for Finance, Technology and Entrepreneurship, London. He was featured in the top 100 Economics Times Young Leaders Program in 2017. Besides being an exemplary associate at Standard Chartered Bank, he is also an expert presenter and speaker. So thank you so much, Utsav, for joining in today for our webinar. Over to you.
Good evening, everyone. That was quite an introduction, Shreya. Thank you so much, and many thanks for having me. My name is Utsav Pathak, and I have been following developments in the field of financial technology for a few years now. Today, I'll be taking you through a presentation on financial technology and how it has evolved over the years. Today's topic of conversation is fintech and digital landscapes around it. We'll be broadly covering two topics: one, wealth technology, and second, robo-advisory. So getting on with it, in wealth technology, we'll be covering what's wealth tech all about, with this wealth management technology. Next would be industry overview and industry trends. Third, investment in wealth tech and the future of wealth technology. We'll be covering the adoption of cloud computing in wealth technology, followed by the use of blockchain technology in wealth tech, adopting artificial intelligence in asset management. Okay, so starting on with it, what's wealth tech all about? Wealth tech is a segment within financial technology that focuses on improving wealth management and investing. So by targeting inefficiencies in wealth management value chain, wealth tech firms are seeking to transform the industry. The words wealth and tech have come together to give rise to a new generation of financial technology companies that create digital solutions to transform the investment and asset management industry. As we can see in the attached image, the typical engagement of a RIA, which stands for Registered Investment Advisor, or a wealth advisor with his client. So these days, typically, as clients are meeting investment advisors on a Zoom call, client engagement is online. Rebalancing of investment portfolio, which means advising the clients which investment deal to square off, that is, to sell off and wherein to invest. Followed by robo-advisory is the new field of wealth tech, which we'll be covering in next segment of this presentation. So the question is, how does wealth technology helps in bringing about a meaningful change in wealth management ecosystem? It helps in three ways. One, it leads to efficient workflows. Wealth tech helps to streamline the workflow channels by strengthening the loose ends. Two, optimal portfolio management. Wealth tech helps in rebalancing the client investment portfolios by advising from time to time on which investment to exit and wherein to invest. It helps to identify investment options which have given higher compounded annual growth rate, which stands for CAGR. Three, it leads to improved client experiences and greater transparency. So wealth tech acts as one-point contact for all sales and service queries, which leads to better client experiences. So, the next question would be that what is the future of wealth technology? The use of predictive analytics, has been applied to get additional insights into client behavior and improve firms' delivery to their added products and services. It involves extracting information from existing data to determine and show future trends. Models are, therefore, generated to predict future events and behaviors in wealth technology. According to recent research by Aberdeen Group's Predictive Analytics in Financial Services, the analysis found that asset management firms with predictive analytics achieved a higher achieved an average of 11% increase in the number of customers in the past 12 months. So advisors can now apply the use of predictive technology to anticipate the client's needs and then offer additional products and services. So next is the adoption of cloud computing platforms in wealth technology. Cloud computing has become a significant trend in wealth technology. There have been increased compliance requirements, which includes Markets and Financial Instruments Directive, which stands for MIFID. The conditions make company gear towards cloud computing to lower the upfront capital expenditure and enhance sustainable growth. Cloud-based derivatives leads to market end-to-end post-trade services, and it offers services in asset classes for investment banks and asset management companies. Cloud computing platforms also increase productivity of client advisors. So wealth management firms integrate mobile as a key for their customers for valuable service proposition and engagement on a personal level. Next is the use of blockchain technology in wealth tech. Blockchain technology is changing the face of wealth management. This commonly decentralized distributed ledger technology is under research and development by most investment companies around the world. According to a research by Robini Thought Lab, it has found that out of 225 out of 500 wealth management firms it surveyed had incorporated the technology in some way, which is blockchain. This is by allowing the transactions to be verified electronically over an established network of computers. A Santander report published in 2015, it shows that banks could now save up to $20 billion a year by late 2022. The result could get achieved by using blockchain technology in asset management. The report shows that adoption of blockchain techniques in the asset management sector is highly inevitable. Furthermore, blockchain technology will create multiple new classes of assets. Next on our list is adopting artificial intelligence and asset management. So the wealth management firms use artificial intelligence and data mining mechanism to invest in a better way, evaluate the wealth market, and gather customer specific behavior. AI is also used to instantly identify available opportunities that deliver appropriate and relevant services or products to clients. Due to the rapid growth of such technological advances, it arises the establishment of better crime detection mechanisms, automated chatbots, compliance handlers, and more. With the incorporation of artificial intelligence and asset management, especially for firms which are highly investing in cybersecurity, companies could analyze the amount of sensitive data. AI systems could be optimized across multiple data centers and servers to ensure high-level blockchain security and crime detection measures. The wealth management companies are becoming increasingly alert to the risk of cybercrimes. The potential downfalls due to such threat make most large entities apply artificial intelligence services to identify and evade risk happening out of transactions made over digital dimension. Most asset management sectors incorporate artificial intelligence into their research and development. In wealth management, decisions form a very crucial part. Artificial intelligence could thus help managers make effective decisions for their clients by automatically research troves of data in collaboration with quantum computing, and providing the best results each time. Conclusion, a further look into future technologies in wealth management sector. Technology is continuously acting as an amplifier for the continuous growth of wealth management sector. According to recent Capgemini report entitled Self-Service in Wealth Management, there is high demand for digital services. Wealth management firms and financial institutions are thus in the process of developing an environment that is conducive towards the development of self-services for their clients. Software automation has been emphasized in asset management. So the next thing that we'll be covering is investment in wealth tech. According to recent figures from financial technology, FinTech analytical firm FinTech Global, wealth tech is one of the hottest verticals right now within the financial technology, that is FinTech space. Indeed, funding for wealth tech ventures has surged since 2014, hitting a hefty $4.6 billion. And this strong trend has continued into first quarter of 2019, a 3-month period in which wealth tech companies raised almost $2.5 billion. As a consequence of this growth, there has been an emergence of new avenues and trends in wealth technology. Most firms aim at increasing their top lines. Almost every wealth and asset management firm is struggling to achieve excellence in areas of client experience as well as regular management of transformational change. So we covered the wealth tech sphere. If anybody has any questions, I'll be happy to take them at the end of after we cover the second leg of this presentation. So moving on, the next segment which we'll be covering is robo-advisors. So in the last few years, the wealth management industry has experienced a rapid proliferation of robo-advisor, both for financial advisors and direct-to-consumer models. While many financial advisors were skeptical at first, robo-advisors becoming more widely accepted throughout the industry. As advisors prepare for generational wealth transfer, many are upgrading their technology and with it are looking to utilize robos in order to enhance their clients' experiences and improve overall operations. So the question is, what are robo-advisors? Robo-advisors are automated algorithm-based systems to provide portfolio management advice. These services are created with customer-centric thinking, where consumers are being placed at the center of these developments, and the technology is developed based on their wants and needs. This opens a market for new possibilities as it becomes more accessible to more people, a process which is increasing in popularity for many financial institutions. Robo-advice is attractive to clients for a number of reasons. Firstly, it means lower fees and lower minimum investment on their transactions. Secondly, it means more efficient management of investments. This is because the majority of robo offerings provide portfolio management using algorithm-based automated investment solutions that auto-rebalance the asset allocation of the client's portfolio without them needing to take action. Thirdly, it offers more comprehensive advice for less sophisticated investors. A closer look at the current robo-advisor capabilities in the attached task shows the client advisor engagement lifecycle and how robo-advisory can be leveraged in order to be given a better wealth advisory solution to the client. Moving on, as we continue to progress on usage of high-end digital solutions to the client, a client's expectations from wealth advisory domain will continue to move up the graph. The attached illustration shows mentality of a rewired investor. They say idea is the currency of the present, and as we continue to move on a path of disruption, robo advisory offers great disruption as soon as we reach inflection point, and this is poised for exponential growth. Robo advisors, the rise of automated advisor. In the first slide, we can see how robo advisor has evolved over the years. So, going forward, we'll be covering following topics as a part of robo advisor capabilities. This slide shows the current robo-advisor capabilities. In the center, we have a client-advisor engagement lifecycle. Traditionally, the wealth management firms has relied on private banker and personal relationships to predict client needs and ensure seamless experiences. Digitization does not replace that personal relationship, but enhances it by speeding up the onboarding process and using customer data to accurately predict what will appeal to that customer's individual needs. By removing paper from process, such performance reporting, advice provision, and asset management, bankers are able to provide more clients with personalized service, which they will come back time and again. Wealth tech innovations such as robo-advisors are become increasingly popular due to high net worth clients becoming more digitally savvy and expecting the same levels of transparency and connectivity offered by retail banks. Moving on, the following slide shows the benefits of robo-advisor services. The main advantage of robo-advisors is the way they are low-cost alternatives to traditional investors. By eliminating human labor, online platforms can offer the same services at the fraction of the cost. Most robo-advisors charge an annual fee flat of which is 0.2% to 0.5% of clients' total account balance. This compares with a typical rate of 1% to 2% charged by human financial planner. Robo-advisors are also more accessible. They're available 24/7 as long as the user has an internet connection. Furthermore, it takes significantly less capital to get started, as the minimum assets required to register for an account are typically in hundreds to thousands. It may range. There is a broad range for it. However, the hallmark for an automated advisory services is the ease of online access. But many digital platforms tend to attract and target certain demographics more than the others. namely the younger cohort of millennial and Generation X investors who are technologically dependent and still accumulating their investable assets. The population is much more comforting sharing the personal information online and entrusting technology with important tasks, such as wealth management. Indeed, much of the marketing efforts of robo-advisory firms employ social media channels to reach millennials. So moving on, we have already seen a growth pattern for robo-advisor. When the disruption happens, it can only happen fast. As you can see, when it reaches the inflection point, the pace of innovation goes up at an exponential rate. With more digital inclusion and transformation, robo-advice is poised for exponential growth. Robo-advisors opens new frontiers in analytics, customer satisfaction, and fiduciary responsibility. But it also exposes institutions to new risks they shouldn't underestimate, including regulatory risk, business risk, operational risk, technology risk, and client expectations. Moving clients from human-based technology-based experiences introduces risks such as low adoption and increased inquiries. In addition, the inability of the robo-advisor to better capture a client's risk tolerance than a human financial advisor may only lead to misalignment in asset allocation or conflicts of interest based on fees. Automated questionnaires may not account for behavioral biases. So the next slide shows the mix of robo-advisory and human advisory, which is called a hybrid advisory model. Or it is also known as bionic advisory. So this service merges robo capabilities with human ones. A hybrid robo advisors combines a digital algorithm with human investment advisor. To explain, the idea is to bring the reassurance of a person to those who are not fully comfortable with totally automated investing solution. The hybrid robo advisors exist because many customers feel better if there's a person to talk to. In addition, some people are uncomfortable with machines managing their finances. So specifically, the average robo combines a standard package of algorithms with a person. So there's a comparison between robo advisory and human advisory with pros and cons of both of them. So moving on with the future of robo advisory, perhaps the single biggest challenge facing robo advisors is that they cannot currently offer services that a human advisor can. Despite the name robo advisor, do not advise anyone. All they do is automate parts of investment process. The basic point here is that AI technology is still in its infancy, and there is no telling what height it can climb. The other major issue plaguing robo advisors seems to be lack of trust. Most people dislike the idea of handing their well-being of investments to an unthinking machine. Despite a great initial start, robo advisor seems to be it is probably at an important crossroads. There is no doubt that robo advising has already drastically changed the investment landscape, but it still seems to the lack of critical mass necessary to drive it forward as a new paradigm for financial management. In my opinion, two important things needs to happen if robo advising is going to succeed. One, first, AI technology needs to become more advanced so that it can happen more complex transactions and planning. The development of AI in recent years gives us good reason to think that AI can stand up to this challenge in near future. Second, the general public needs to build more faith in the idea of using a machine manage their personal finances. We do think we have made a good case here, though, that the forecast for robo-advising is optimistic. As the AI technology advances and public sentiment becomes more favorable to the automated machines, we expect robo-advising to form new paradigm in the investing world. Thank you for being such a great audience. Any questions, I'll be happy to take them.
So in case anybody has any questions, please feel free to drop in on the comments. Okay, it doesn't look like anybody has any questions. So, Utsav, could you let us know your experience in FinTech and how things work out on a regular basis? That would
Of course.
definitely help our viewers.
Sure, sure. The way I see it, the use of fintech, artificial intelligence, and robo process automation is yet to take up in this, as far as India is concerned. So I've been talking to a lot of people in the fintech space, and they believe that the future is bright. And going forward, as there is more digital inclusion, we can see a lot more automation happening. However, as we all know, that India is a lot more underbanked sector, and probably in order to for us to take it to the next level, people need to get more tech savvy, which is going to take its time. But I believe, that the way we have moved forward after demonetization and the pandemic, people are a lot more inclusive of going forward with digital transactions. So yeah, I believe that yes, the it looks I believe it's going to take up its own time to for us to get there as a country. But I genuinely believe that in the last couple of years it has come a long way. Does that answer your question?
Yes, it absolutely does. So, like, I know that you've given a lot of insights about robo advisory. Is there
Sure.
anything that can, like, is there anything in addition to what you said that which can, like, help our viewers?
See, what I see is so robo process automation. As we speak, it is so the regulators in India haven't allowed it as yet. However, it has taken off in Singapore. So I believe once the regulator approves of a robo advisor managing their finances along with a human advisor, it will be a blend of both. So people also open up to a robo advisor advising them investment based on algorithm and due diligence done by wealth management firms. So yeah, I believe that once we see the traction happening in Asia Pacific, we'll also come up the curve. As we speak, as I was telling you earlier, that robo process automation is not allowed by regulators in India. It has taken off in Singapore. It has taken off in Hong Kong. As soon as India opens up its market for robotic process automation, obviously it will play an important role. So yeah, does that answer your question?
Absolutely. So, Utsav, in addition to robo advisors, how do you feel InsurTech has taken its course in India? Do you feel there is a chance for it to grow?
Of course, it does. I believe that InsurTech, largely it's also forms a subset of wealth management sector itself. So, it's one of the many pieces of wealth management sector. So the way I see it, as I said about wealth management and wealth technology taking up, insurance tech or InsurTech will also take up the same curve. The regulators have also opened up their borders in order to make it more inclusive and in order to reach out to a wider audiences. It is very important for insurance technology piece to also pick up, just like wealth technology is also taking up. So I believe the by 2025 we are very hopeful that a lot more inclusion is going to happen. So yes, wealth tech, insurtech, and the other financial technology sectors, the sub pieces of it, the payment technology space, the regulatory technology space, they'll all start talking to each other a lot more than what they have been doing in the recent parts. And yes, it's going to take up at an exponential rate.
Okay, that's great. So, anything else you would like to add, or anything else that you would like our viewers to know?
So that's pretty much it, Shreya. I wanted to cover a few points, which I've done that as a part of my presentation and as a part of my pitch. There were a few pointers and insights which I wanted to share with the larger audience. I do realize that it will take a while for the audience to understand, comprehend it, and whatever questions they may have, you can circle back to me. So I look forward to answering all those questions as and when they arise. They can reach out to me. I'm very much accessible through your platform. So yes, looking forward to hearing it from your team, the larger audience. What are their views on how wealth tech, insure tech, and robo advisory space is going to take off? And I believe I can add some value to the conversation.
Absolutely. Thank you so much, Utsav. I
Pleasure.
think this session has been very insightful for us. And if any of the audience has any questions, feel free to reach out to us via the Skillenza platform
Of
or
course.
on our YouTube comments. We can definitely
Yeah.
get back to Utsav on that. Thank you so much, Utsav. It's been a pleasure.
Thanks. Same here.
Thanks.
Thank you so much, Shreya. Thank you so much for having me. Looking forward. Thank you.
Thank you.
Yeah.